Hello, welcome to the Global View on this Friday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Let's get across what we have seen overnight. Wall Street's main indices closing lower as rising treasury yields dented risk appetite, and disappointing retail results led by Walmart soured investors, with the consumer sector being the worst performer there. We also see oil prices move further higher. The US Treasury yields, they resumed their upward trend despite fresh assurances from Treasury Secretary Scott Bessent of liquidity support for longer dated notes and bonds. That saw sentiment turn negative, with the Dow down around 1.3%, the S&P, and NASDAQ also being sold off, and we also saw some negativity among the small caps in the Russell 2000. So as I mentioned, consumer discretionary sector, one of the biggest drags. Walmart shares fell heavily after it missed Wall Street expectations for quarterly comparable sales, and rival retailers such as Costco and Dollar Tree also falling as a result. And also in the discretionary space, Royal Caribbean and Carnival among those cruise lines that fell today. Biotech Moderna, it finished down more than 23% after it surged nearly 177% the previous session. And Deere shares, they closed up after a full year net income forecast increase from the world's largest farm equipment manufacturer. Well, the Treasury Secretary Scott Bessent in the US said that the US will unveil its plan to economically isolate Iran and its trading partners after President Trump threatened Tehran and others with an economic D-Day to end the current stalemate in the Middle East. Meanwhile, the US Treasury surprise bond buyback failed to quell lingering concerns about inflation and expanding government debt as bond yields resumed their upward trajectory. The Treasury responded to US long bond yields hitting the highest level since 2007 by doubling long-end buybacks to at least $4 billion per operation. While the US two-year Treasury yield rose to 4.18%, the 10-year was up to 4.69%. Australian three-year government bond yield futures rose to 4.56% and the 10-year up to 5.06%. US dollar index was up slightly on the day, with the Aussie trading at 71.2 US cents. Oil prices rose to a one-month high following the US threat to economically isolate Iran, and Brent crude rose to $94 a barrel. That's a one-month high. Gold recouped some earlier losses to trade largely steady. Spot gold at around $4,520 an ounce. Copper futures down marginally. Iron ore at $97 a tonne. And Bitcoin has continued its resurgence to be up another 5+% above 73,000 US dollars. Let's get across those market moves now. Brad Gastwirth joining us from Circular Technology. Brad, welcome back to you. So certainly negative on the equity market at the moment. Just, I guess, a little concern there, or maybe more than that, in regards to what we're seeing on the bond market at the moment. Of course, the US Treasury did step in the previous session, but that doesn't seem to have worked.
Yeah, I mean, the session overnight, I think a lot was looking at the Walmart results, which you previewed. The basic comp there is you had the slowest comparable sales in 6 years at Walmart. I think that spooked the markets. Guidance a lot lower than expected. The inflationary pressures that we've seen from the Middle Eastern war are certainly putting pressure on the US consumer, and that's something that I think a lot of people don't want to ignore. The reality is there's a lot of positive drivers for the second half this year and for the next 12 to 24 months, with the artificial intelligence being the big driver. That being said, there's going to be volatility here these summer months as we go into the end of 2026.
Brad, do you think the market investors need to rethink their approach to what's going on in the Middle East with that conflict? It has very much become a war of attrition with no end in sight, yet we still see the reaction to those daily headlines. Do you need to discount those?
Yeah, I think, Andrew, I think you hit it on the head. I think there's been a tremendous amount of volatility as you get, our administration making comments, and then they're quickly, sort of ignored or said the opposite by Iran. I mean, what's happening on a day-to-day basis is confusing almost everybody. That being said, I think that you are going to see this prolonged Middle Eastern conflict because the Trump administration is not going to make any real considerations on the nuclear front. And what Iran has asked for last is something that the Trump administration is not willing to do. I think now it's going to be a war of attrition. And, unfortunately, this could actually hurt the consumer much longer because if you look at some of these inflationary prices, I mean, prices are up significantly on the energy front. I'm not sure what it's like and your neck of the woods in Australia, but over here in the States, I mean, we're seeing 50% plus price increases on oil. And I mean, that's having a major impact to the consumer.
Yeah, certainly feeling it here as well too, Brad, given we're at the end of the supply chain as far as fuel is concerned. Turning to what we're seeing in, well, both precious metals and Bitcoin, Brad, how do you account for the resurgence of both?
Yeah, I mean, on Bitcoin, I'm still not the biggest believer at these levels. I see more downside risk. I know we've had a little bit of a rebound here back to the low 70,000 range. But if I look at precious metals, I absolutely believe they should be part of people's portfolios. They're an absolute amazing hedge against any of these macro fronts. And if we go into it in draconian situations, gold, silver, copper, among others, are great investments. Also, if you just look on the investment side, I mean, you have, global sovereignties, increasing reserves on a global basis. You're having all these reserves. You're having it, again, being a great hedge. I like the investment profile for both gold and silver. On silver, you have the industrial demand as well, which is another driver for silver.
Now, Brad, turning back to equities, of course, pretty much at the tail end of earnings season there, but a biggie yet to come in the form of NVIDIA. We're going to get that next week. What are the expectations? How pivotal is that going to be?
Yeah, I mean, I think all eyes on on August 26th when NVIDIA reports their quarterly earnings. I think there's going to be a lot of things that, at least and I think a lot of the other technology specialists will be focused on. I would like to hear what they have to say on the supply chain. Do they feel that there's any easing? Through my checks throughout Asia, it's still incredibly tight. Prices are still going much higher. I think NVIDIA is going to see incredible demand. They're going to have very positive things to say. They're going to guide very positively. But is there going to be a delay on their next generation Vera Rubin, which is the next architecture past Blackwell? I've picked up that there certainly is some delays going into next year when it's supposed to be launched. The other thing that I'm picking up is NVIDIA is checking on lower memory configurations because of what we've seen on the memory front. And if that's indeed true, does that loosen the memory market a bit? I still think there's incredible demand for memory, but there's some really interesting things that I think NVIDIA could comment, which I think a lot of people will be paying attention to.
Yeah, so we're obviously still seeing that incredible build of AI infrastructure, Brad, which stocks like that are critical too, but also with a renewed focus on memory, and that's becoming really critical at the moment, isn't it?
Yeah, absolutely. I mean, if you look at SK Hynix having one of those world record, IPOs, you have what the stock of Micron and SanDisk, what they've done in the last 12 to 24 months, it's gone almost parabolic. I mean, memory is going to be in shortage for at least another 12 plus months. The big concern is, one of the big, questions right now are future configurations going to use less memory on the artificial intelligence side? I find it hard to believe that they will. I mean, again, if I look at NVIDIA's next generation, they're going to double or even triple some of the memory used in their system. Now, is it just going to be, 1.5 times instead of 2 times? I think it's still going to be up and to the right. I think demand is still going to be much stronger, and there's just not enough capacity to build enough chips. So I still see memory as a very strong investment thesis going in the next 12 plus months. That being said, I mean, it's gone parabolic, and I think any news that could be negative could hit those stocks.
So, Brad, bigger picture then, given what you've just said, you still broadly constructive on equities?
Absolutely. I still think you use volatility here to be positive on U.S. equities. I like anything related to AI infrastructure. I do like some of the large mega caps. I think Alphabet, Amazon, Microsoft, even Meta is interesting with some of their, they have a few different plays. If they all of a sudden start charging people on WhatsApp, let's say they charge a few dollars a month for people to have WhatsApp, or they sort of monetize their Instagram base, I think it's a very possible move that they could do that. I wouldn't be surprised if they try to do this in the next 6 months. And if so, that's another significant revenue driver for that company. But yes, I am constructive here. I still think weakness should be bought.
Right. Great to get across what you're seeing on the markets at the moment. Thanks for joining us on Circular Technology.
Thank you, Andrew.
All right, let's refocus then on the local market ahead of the open here on this Friday. As you can see, SPI futures down 0.3%. We did have some positivity on the market yesterday, but that was something of an anomaly when you consider what's happened over the past 5 or 6 sessions, where it has been decidedly negative. A lot of that, though, driven by what we're seeing on the local market, in particular in the midst of reporting season and some of those key results. We're going to get more of those when we get underway. Stay with us for the open.